Good morning, everyone. Welcome to the June 2nd Tuesday edition of the Market Opening Bell, your 10-minute guide to the stock market. The Hang Seng Index opened just 2 points lower, but quickly reversed higher, reaching an intraday high of 25,486 before closing at 25,398, up 215 points or 0.9%. Total turnover for the day reached 321.3 billion Hong Kong dollars. The Hang Seng Tech Index closed at 4,964, up 80 points or 1.7%, while the H-share index closed at 8,507, up 82 points or 1%. Southbound funds recorded a net inflow of $4.657 billion into Hong Kong stocks. Among them, they net bought Ecclesall for $2.707 billion, PopMart for $800 million, Tencent for $687 million, and Sinu for $502 million. On the selling side, the net sold Lenovo Group for $547 million, Xiaomi for $352 million, Kingport Laminates for $208 million, and Hua Hong Semiconductor for $200 million. According to statistics, Southbound funds have net bought SMIC for 11 consecutive days, totaling $14.949 billion. Net sold Xiaomi for 3 consecutive days, totaling $954 million, and net bought PopMart for 3 consecutive days, totaling $2.799 billion. Technically, the Hang Seng Index is being kept by the 10-day moving average at 25,463 points and the 25,500 point level. If it can break above 25,500 points, the next resistance level would be the 250-day moving average at 25,665 points. On the mainland, the 3 major A-share indexes opened mixed but then collectively moved lower, closing down between 0.3% and 2.2%. The Shanghai Composite fell 10 points or 0.3% to close at 4,057. The Shenzhen Component Index dropped 234 points or 1.5% to 15,340. The Chinese Index plunged 87 points or 2.2% to 3,950. Combined turnover in Shanghai and Shenzhen reached 2.88 trillion yuan. The onshore renminbi central parity rate against the US dollar was set at 6.8167, up 9 pips from the previous day and marking the highest level since February 14, 2023. China's latest May 2026 Purchasing Managers Index showed a divergence between official and private data, with manufacturing expansion slowing while non-manufacturing activity rebounded. The official manufacturing PMI fell 0.3 to 50, in line with expectations and a 3-month low. The non-manufacturing PMI rose 0.7 to 50.1, beating expectations. Rating Docs manufacturing PMI declined 0.4 to 51.8, still above the expected 51.4 and remaining in expansion territory for the 6th consecutive months. In the Hong Kong stock market, Minimax opened up 5.3% but reversed sharply to close down 15.7%. The decline was mainly because the market quickly priced in the positive news of its return to the star market in the morning session, but was then hit by heavy profit-taking pressure due to its extremely high valuation, panic over a massive lockup expiry coming in July, and the reality of widespread losses across the large language model industry, prompting funds to cash out quickly at high levels. Estimates include that only 5% of Minimax total shares are currently freely tradable in Hong Kong, meaning it is in a highly controlled state, while as much as 65% of total shares will see their first batch of restricted shares unlocked in July. Facing such enormous potential selling pressure, market funds chose to take profits early as A-share positive sentiment peaked. Although Minimax recently reported that its annual recurring revenue, ARR, had doubled to $300 million. The company still recorded a full-year loss of $1.872 billion last year. Its current price-to-sales ratio stands at approximately 430 times, far higher than Anthropic's roughly 20 times. Hong Kong-listed coal stocks continue to perform actively. News reports stated that a recent National Development and Reform Commission meeting called for ensuring coal production and supply, strengthening thermal coal transportation guarantees, and meeting peak electricity demand, providing clear support for coal demand during the summer peak season. Following a major coal mine accident in Shanxi, safety inspections have been intensified, with some mines suspending operations for self-examination, limiting capacity release. As the peak demand season approaches, supply constraints have directly boosted expectations for higher coal prices. Mainland automakers have successively released their May delivery figures, supported by May Day promotions, local auto shows, and concentrated new car deliveries. Most plants reported month-on-month growth, driving strong performance in new energy vehicle stocks. Leapmotor delivered a record 81,569 vehicles in May, up 81% year-on-year and 14.2% month-on-month. Hongmeng Zhixing delivered 46,122 vehicles, up 3.8% year-on-year and 40.8% month-on-month. NIO delivered 37,705 vehicles, up 62.3% year-on-year and 28.4% month-on-month. Li Auto delivered 33,350 vehicles, down 18.4% year-on-year and 2.2% month-on-month. Xpeng delivered 32,158 vehicles, down 4.1% year-on-year for the fifth consecutive month of negative year-on-year growth, but up 3.7% month-on-month. Xiaomi Auto continued to deliver over 30,000 vehicles in May, roughly flat with April. With the more affordable YU7 standard version and high-performance YU7 GT launched at the end of May, the market expects the new SUV's capacity ramp-up to be a key driver for June deliveries. On the smartphone side, the new Xiaomi 17T series will be officially launched next Monday, June 8th, including the Xiaomi 17T and 17T Pro models, positioned as all-round imaging flagships. Both have already been released overseas, with the 17T starting at €749 and the 17T Pro at €899 in Europe. BYD sold 383,000 vehicles in May, up 0.2% year-on-year and 19.4% month-on-month, with overseas sales exceeding 160,000 units for a new record high. Geely Auto reported total vehicle sales of 237,637 units in May, up about 1% year-on-year. Its Zeekr brand delivered 34,377 vehicles, up 81.8% year-on-year, achieving double growth both year-on-year and month-on-month for the fourth consecutive month. Overall, the China Passenger Car Association expects May retail sales of narrow-body passenger vehicles to reach approximately 1.52 million units, up nearly 10% month-on-month. New energy vehicle retail sales are expected at around 950,000 units, up 12% month-on-month, with market penetration likely reaching a record high of 62.5%. Wu Kai, academician of the Chinese Academy of Engineering and chief scientist of CATL, recently revealed that CATL would scale up production of a series of sodium-ion battery products this year. Compared with lithium-ion batteries, sodium Iron batteries benefit from abundant raw material resources and lower costs. Looking ahead, lithium-air batteries will be CATL's next major development focus. Wu Kai noted that lithium-air batteries, which use lithium as the anode and oxygen from the air as the cathode reactant, offer extremely high theoretical energy density and will be a key battleground in the global next-generation battery competition. Hong Kong-listed gaming stocks rose across the board. Macau's Gaming Inspection and Coordination Bureau reported that May gross gaming revenue reached 22.611 billion petas, up 6.7% year-on-year and beating market expectations of 5% growth. For the first 5 months of the year, cumulative gross gaming revenue rose 10.9% year-on-year to 108.379 billion petas. Meituan released its first quarter results ended March. Total revenue reached 91.039 billion yuan, up 5.6% year-on-year and beating market expectations of 90.795 billion yuan. Core local commerce revenue grew 0.1% to 64.1 billion yuan. Operating losses narrowed sharply from 10 billion yuan last quarter to 2 billion yuan, mainly due to a significant reduction in losses from the instant delivery business. In the in-store hotel and travel segments, Meituan has stabilized against Douyin's competition, with user purchase frequency and Meituan Flash purchase scale both growing steadily. Operating margin declined year-on-year but improved sequentially to negative 3.2%. New business segment revenue grew 21.3% year-on-year to 27 billion yuan, with operating losses narrowing from 4.6 billion yuan to 2.1 billion yuan and margin improving to negative 7.8%. Self-operated business such as Xiang Supermarket and Qua LV performed strongly. The overseas delivery platform Kita maintained stable profits in Hong Kong, while refined operations in Saudi Arabia, other Middle Eastern markets, and Brazil began showing results with significantly improved fulfillment efficiency. The group reported a net loss of approximately 6.827 billion yuan for the quarter, compared with a net profit of 10.06 billion yuan in the same period last year. On a non-IFRS basis, adjusted loss was 4.968 billion yuan, compared with an adjusted net profit of 10.95 billion yuan last year, beating market estimates of a 6.83 billion yuan loss. Then the expected operating loss was 6.47 billion yuan, better than the expected 9.01 billion loss. This suggests Meituan may have successfully passed the peak of the subsidy war, signaling a potential turning point in profitability recovery. The three major U.S. stock indexes hit record highs again on Monday, with the Nasdaq and S&P 500 rising for the 8th consecutive trading day. U.S. President Trump stated that Israel and Hezbollah have agreed to mutually reduce attacks in Lebanon. Technology stocks led the gains. The Fear Gauge VIX index rose 0.73 points or 4.8% to 16.05 points. The Nasdaq rose 114 points or 0.4% to 27,086 points. The S&P 500 gained 19 points or 0.3% to 7,599 points, and the Dow Jones Industrial Average increased 46 points or nearly 0.1% to 51,078 points. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks listed in the U.S., rose 96 points or 1.5% to close at 6,683 points. Apart from technology and energy, most other sectors fell, with utilities, consumer discretionary, and communication services leading the declines. Nvidia surged 6.3% and Microsoft rose 2.3%, both among the Dow's top gainers. Nvidia announced its entry into the personal computer chip market, potentially breaking the long-standing technological dominance of Intel and AMD in this sector. Nvidia CEO Jensen Huang said that starting this autumn, the company's all-new RTX Spark Super chip will be first used in laptops and desktops from Dell and Lenovo, among others. The chip is developed in collaboration with MediaTek and will run Microsoft's Windows on ARM system. The first batch of new laptops equipped with RTX Spark graphics cards will target the high-end market, while subsequent versions of the technology will support a wider range of price points. Nvidia also stated that TSMC is adopting Nvidia's CUDA-X software libraries and AI models in its chip design and manufacturing processes to accelerate computational lithography, simulation, process control, and fab scheduling. It will also use the Metropolis platform and Tau toolkit to enhance AI defect detection capabilities, thereby boosting productivity, improving yield rates, and increasing the efficiency of advanced semiconductor manufacturing facilities. Additionally, Nvidia announced that it has partnered with Unit 3 Robotics to sell its first robotic system to researchers, including those at Stanford University. The system combines Unit 3's nearly 6-foot-tall H2 humanoid robot with Nvidia's Jetson Thor hardware, powered by a Blackwell chip to support the robot's AI functions. Nvidia noted that its humanoid AI model, Isaac Root, and its simulation system are part of the new robot testing suite. The robot will use robotic hands manufactured by Singapore's Sharper. Unit 3 Robotics Star Market IPO was being reviewed on June 1st. If approved, the company can proceed with the next steps of its IPO financing. It plans to issue no fewer than 40.4464 million new shares, raising 4.202 billion yuan. The proceeds will focus on strengthening core technologies and long-term strategic positioning, with a key emphasis on the R&D of large AI models for intelligent robotics. Salesforce surged 9.7%, making it one of the top performers on both the Dow and S&P 500. The company announced it will invest $2 billion in France by 2030 to expand its artificial intelligence and cloud businesses. It also agreed to acquire the composable content platform, Contentful. Dell shares rose nearly 11%, extending gains to an 8th consecutive trading day. Chip stocks were mixed. Qualcomm plunged nearly 9%, Intel fell nearly 5%, while Micron Technology rose nearly 7% and broke the $1,000 mark for the first time. Other major tech stocks declined, with Tesla and Meta falling nearly 5% or more, Amazon dropping over 3%, Apple falling nearly 2%, and Alphabet declining over 1%. The U.S. Institute for Supply Management's May Manufacturing Index rose to 54 from 52.7 in April, beating market expectations of 53. This indicates accelerated expansion and marks the highest level since May 2022. S&P Global reported that the final May U.S. Manufacturing Index was revised slightly downward from the preliminary 55.3 to 55.1, in line with expectations. The May reading was higher than April's 54.5, signaling expansion and the highest level since May 2022. Our stock pick today is ChinaSoft International, stock code 354. In 2025, ChinaSoft International deeply advanced its one body, two wings strategic layout, with AI as the core and physical AI and digital AI as the two wings. The company focused on two major core growth engines, AI Harmony OS and the AI Intelligent Business Operating System, and built full-stack product and service capabilities spanning intelligent perception in the physical world to intelligent enterprise operations. For the year ended December 31st, 2025, revenue from full-stack, full-scenario AI products and services reached 2 billion yuan, representing a year-on-year increase of 109.2%. This marks the company's successful transition into a new role as an architect and integrator of enterprise agentic AI, laying a solid foundation for the development of new quality, productive forces and long-term high-quality growth. As the physical AI component of the one body, two wings strategy, the AI Harmony OS business is positioned as the foundation for bringing enterprise AI into the physical world, aiming to provide high-quality data support for AI platforms, leveraging the dual advantages of Kai-Hong OS and the Meta platform. The company adheres to a hardware-software integrated development strategy and has deeply participated in the large-scale implementation of Harmony cities. Through the establishment of a city partnership mechanism, the company has created a new paradigm for smart city construction in core cities such as Xi'an, Shenzhen, and Beijing, building a closed-loop ecosystem covering technology adaptation, product certification, and market application. In key scenarios including transportation, public security, and housing and urban-rural development, the company has launched industry-specific systems such as road harmony and construction harmony, along with multiple intelligent sensing terminals, achieving unified device access and cross-domain collaboration. Notably, in Xi'an, the Adaptation Center, led by the company, has become a national benchmark, attracting a large number of ecosystem partners and forming a significant industrial cluster effect. This fully demonstrates the company's leading position in the open harmony ecosystem. At the other end of the two wings, the AI native enterprise intelligent operating system serves as a key entry point into central state-owned enterprises, shouldering the strategic mission of securing the entrance to enterprise agentic AI. After 5 years of continuous investment, the company successfully launched the all-Meta Enterprise Intelligent Business Operating System, achieving a paradigm shift from traditional recording systems to an Intelligent Business Operating System, EOS. Designed with AI as the core principle, all-Meta deeply integrates cognitive frameworks with execution neural networks to realize the digital twin of physical world business operations. Through a three-layer product architecture, data foundation, cognitive hub, and execution network, it constructs actionable business entities, significantly reducing the latency from insight to action and empowering enterprises with self-evolving capabilities. In the face of industry transformation, the company has fully embraced AI coding and intelligent development tools, promoted the transformation of its workforce structure toward AI talent, and built large-scale standardized digital open cloud factory. In terms of ecosystem development, on the Southbound side, the company has engaged in deep cooperation with domestic chip manufacturers such as Lumsun and Eswin Computing to build a dual open-source self-controlled ecosystem of open harmony plus domestic chips, becoming the core connector for Southbound device access to Harmony OS. On the northbound ecosystem, the company focuses on the large-scale implementation of Harmony OS native applications and meta-services, successfully supporting the completion of Harmony OS adaptation and development for over 1,200 applications, and independently developed the Hongyuan virtual machine to solve the compatibility challenges of Windows applications. Recommendation: suggested buying price $3.95. Target prices: first look at $4.30, then $4.50. Stop loss $3.75. I do not hold the above stock.